started. So good afternoon, participants. I'm Marquita Wiley, and I'll begin by welcoming you to our webinar. Today, we have a brief update on all of the COVID-19 relief programs, along with a more detailed update related to the FFCRA and employee retention credits, those two programs. But first, I'm going to go over a lot of logistics as we have in the past. You will see on your screen, we're using the Zoom interface. At the bottom center of your screen, you should see a tab that says Q&A. Throughout the duration of the webinar, we invite you to enter in or type in any questions you have. We will attempt to answer those questions during the webinar in the background, but we will stop the presentation at about 30 minutes in and open the floor for questions and answers. So expect that we will cover the questions live during the webinar. If we have more questions than we're able to answer during the webinar, we will then send out after the webinar 3 things for you. We'll send a recording of the webinar. We will send the PowerPoint deck that you're looking at. And additionally, we'll send a transcript of the Q&A. So you look for those 3 things after the webinar, okay? So today's topic, first, guidance for small businesses related to the general programs that are offered for COVID-19 emergency, but we're going to put specific emphasis on the FFCRA. We have an awful lot to share with you today, so we'll get started right away, and I'm going to introduce our panelists first. Steve Denny and Terry Lammers, who are co-founders of and managing members of Innovative Business Advisors. Steve will actually handle the update component of the presentation, covering generally the programs that are being offered. And then Terry will be available to answer questions. So expect that you'll hear from Terry as we go into the Q&A. Following Steve's overview, we'll hear from panelist Mindi Rickhoff. Mindi is president of Payroll Central, and she will cover information on FFCRA, or the Families First Coronavirus Relief Act. In addition to that, she will cover information on the employee retention credits. So with that said, Steve, I'm turning it over to you.
Thank you, Marquita, very much. Appreciate your leadership and moderation of these webinars every Friday. So first off, I'd like to start by saying a Good Friday greetings to everybody that's joined us this afternoon. It's a very, very significant holiday, part of an amazing long weekend celebration. And we're just honored that you would take out the time and join us this particular Friday. I wanted to start a little bit differently this time. We're going to talk for just a minute about responsible. And, you know, every one of you that are joining us on this webinar today, you're all leaders. You're all leaders of your family. You're all leaders of your business. You're all leaders in the community. And as one of the coaches and mentors that Terry and I use says all the time, you know, as leaders, we've got a moral obligation to make a positive difference in the lives of those around us. So when you think about being a responsible leader, it is that obligation that that we all hold and is so important in our leadership role. So just to take another second and look at that, you know, responsible, you break it down into 2 parts. First, we have an obligation to respond. So we have an obligation to respond to this health emergency that's going around us and all the impacts that it has on our family and our business and our communities. And secondly, you know, we're able, as leaders, we are capable of responding to this. We're fit for the job and we're worthy of providing a specific response to this for those that we lead. And we invite you to really choose to make that positive difference. Use your wisdom, use your experience, provide hope, provide encouragement, and be that encouraging, hopeful voice to let people know that there will be a tomorrow. So don't forget that leadership responsibility and take that responsibility very, very seriously. you know, again, as our coach and mentor talks about all the time, put the odds in your favor. We also wanted to just take a minute and talk about, you know, where we are and how and where the odds are right now. So when you think specifically about the coronavirus, you know, in the United States, we're demonstrating clearly that social distancing, washing our hands, paying attention to sanitizing common surfaces, things like that are having a meaningful difference in flattening the curve, as they say. But, you know, the virus as a whole really does have a 99% survivability rate. So, you know, if you tune into the national media and even a lot of the social media, it seems like there's so much fear going on around it that people feel like getting the virus may lead to a death sentence. And frankly, the odds don't bear that out. In fact, the odds say that over 81% of the cases are relatively mild cases, that it's really the at-risk populations that tend to suffer from this. And that even if you do get the virus, it's typically short-term and generally follows the flu season. So, you know, don't lose sight of the facts surrounding this virus, and don't fall victim to the various media storylines that are out there. There is a huge amount of aid available, and we're just going to cover a couple of those main points here. That, you know, the testing and the treatment for the coronavirus has now become free through your various insurance providers. The government has underscored that, and we understand that many healthcare providers aren't even providing billing for you for those cases. There is a lot of aid available for various sick and emergency leave programs. We've got an expert panelist that's going to talk a little bit more about those today. There's a whole new range of unemployment insurance that's available. And then there's a whole series of various loans, beginning with the SBA Express Bridge Loan, the Economic Injury Disaster Loan, the Paycheck Protection Programs, and then even SBA debt relief for those that currently have SBA loan products that they are enjoying. And then finally, don't forget that in addition to the federal government, each individual state, many communities, and many industries have various aid programs of their own. So, you know, don't lose sight of the facts that this potential virus is, while it is a health emergency, and we have a responsibility to act accordingly, but, you know, don't rely just on the media. Do your own research, get the facts, understand what's available to you, turn to the experts in each of the various fields, and don't lose sight of those facts. So thank you for indulging me for a few minutes of that prelude. Let me tell you that today we're going to go over a quick update of the various aid programs, things that have happened in the last week. We're going to talk about a couple of new government actions that have come out. And then the vast majority of this presentation, we are going to hand over to Payroll Central, and they're going to cover the Families First Coronavirus Response Act, talk specifically about employee retention credits, payroll tax deferrals, etc. So just dive right in. I wanted to begin with a quick overview of the loan programs that are available, because there's a huge amount of confusion about this in the general marketplace, and Terry and I and the rest of our team are addressing this every single day. So the first loan program that's available out there is what's called the SBA Express Bridge Loan. And this is a loan package that is delivered by your local lender, the bank that you're currently doing business with or that you have a relationship with. And these lenders are authorized under the SBA Express Bridge Loan to provide up to $25,000 in a very, very fast turnaround basis, designed to get money in your hands literally within a matter of days. This is designed to be a bridge loan, and the bridge loan is designed to roll into the SBA Economic Injury Disaster Loan, where you're also applicable for up to an advance up to $10,000. Now, I'll caution you that the EIDL loan takes the longest in order to see the proceeds from it, but that advance should be to you in the first few weeks. At least that's the SBA's target at that point. And then finally, there's the Paycheck Protection Program. And if you already have received the EIDL loan, you can actually roll your EIDL loan into the Paycheck Protection Program as well. And again, the Paycheck Protection Program is delivered by individual lenders, as the Express Bridge Loan is. And I just want to remind you that the SBA Economic Injury Disaster Loan is delivered directly through the SBA portal. So You have to go 2 different places to tap these various programs, but they are designed to work in concert with each other. So let's talk a little bit about aid updates and government actions that have taken place within the last week. So first and foremost, paycheck protection loans, the SBA issued some guidance out to all lenders that they should be dispersing loans within 5 days of receiving an SBA number through the E-Trans system. Now the media has done a pretty good job of reporting that the E-Trans system has been overwhelmed and they've had lots of challenges and delays in that, but generally lenders get an SBA number very quickly upon applying the information into that system. And the SBA is working hard to keep that system open and running. The SBA has also said that they are trying to make sure that grants are getting out within 10 days of the application for those that are available for the advances. Frankly, Innovative doesn't have any clients yet that have experienced that, but we're hopeful that the SBA will live up to the guidelines that they're aspiring to achieve. One of the very nice tools that the SBA has just released this week is a tool on their website to find eligible lenders. So you can go to sba.gov/paycheck protection/find, plug in your zip code, and it will pull up a list of eligible and active lenders in the various SBA programs right then and there. So if you've got questions about whether or not your bank can do this, and if your bank tells you they can't, and you need to know where to go to find other banks and lenders that can, this is a very quick and easy tool that the SBA has made available. Also, a new update that's changed this week is that all principal and interest payments on federal student loans have been suspended through the end of September 30th, 2020. As of last week, you actually had to apply to the lender for a deferment, and this week guidance has been released that says all federal student loans that are currently in place and active are automatically suspended through that period of time. The IRS came out on Thursday and extended some additional tax filing deadlines. It basically applies to all taxpayers with all filings or deadlines that were due before July 15th. It moves everything to that July 15th date. And it does include the estimated tax payments. So there was a conflict between when your Q1 estimated tax payments were due and your Q2 tax payments were due, and the IRS has cleaned that up and said everything moves to July 15th. A couple of other quick changes. The IRS has waived the carryback period for NOLs or net operating losses from December of 17 forward. And they're allowing partnerships to file amended returns. And if you've got a return to file in that regard, there are 6-month extensions available. One of the most significant things that's happened in the last few days is the Federal Reserve actions. And there is a whole range of new actions that the Federal Reserve is taking on its own. First is they have announced that they are going to be establishing what they call the Main Street Business Lending Program. These are independent of the SBA as we understand it. Not a lot of details on this, but the Federal Reserve notified the communities that they should be on the lookout for more details on that program. In addition to that, the Federal Open Market Committee has begun to repurchase securities and mortgage-backed securities. So those of us that remember the experience of the 08, 09, 010 banking crisis, you know, the Federal Reserve got back out in the marketplace and did what was commonly referred to as QE 1, 2, 3, and even QE 4. So they're back doing that as well, expanding the balance sheet of the Fed. They've also created a new $300 billion credit line to businesses, and these are mostly medium and large businesses, those that are above the 500 employee threshold. And then a new primary market corporate credit facility for bonds, which basically businesses use for a lot of their borrowing requirements. And then there is a whole new term asset-backed securities loan facility. You know, in the United States, unfortunately, student loan, auto loan, and credit cards make up a huge portion of the debt that we as individuals carry around. And the Fed is creating a new loan facility against those. And then there will also be a new credit facility available to municipalities, counties, and cities. Finally, the administration, as a lot of you may have been seeing on the news over the last 48 hours, is proposing an additional $250 billion in PPP assistance. And I was on a couple of webcasts that some of the Congress people are providing out there, and there is a real fear in Congress that we're soon going to be running out of the PPP assistance money that Congress allocated, and so the administration has come out and proposed some more. If you've never written to your congressman, now would be a great time for you to send them an email, send them a note, and say, look, let's drop the partisanship and make sure we get enough money and loans out there to get us through this health emergency. So that gives you a quick overview. I am very honored to be able to introduce you all this afternoon to Mrs. Mindi Rickhoff, who is president of Payroll Central. Payroll Central is an O'Fallon, Illinois-based payroll processing firm. They've been in business since 1998. They're incredibly good at what they do. They are experts in the field with a tremendous amount of experience. And Mindi, we're honored to have you today, and love to listen to what you've got to educate us on. So I'll give it over to you.
Thanks, Steve. Appreciate it. All right. Just make sure everybody can see my screen.
Yes, we can see it.
Great, thanks. All right. Today I'm going to talk a little bit about all these acronyms. So I'm going to explain kind of what the acronyms mean first, and then I will probably refer to a lot of them as the acronym just because it gets to be very wordy. So we'll go ahead and get started. This is just my disclaimer that says materials that we've gotten is not intended to provide tax, accounting, legal, or other professional advice. But I will be happy to answer any questions that I can answer after we're done. So the first thing we're going to talk about is the Families vs. Corona Response Act, also known as the FFCRA. This is kind of going back to what happened in mid-March, and the reason we decided to come back to this topic is it's currently in effect now, and it seems like because of the Payroll Protection Program and all of the stuff that's going on with that, this seems to have gone on the wayside. So this is just kind of a quick update and explanation on what it is. Like it mentions, President Trump signed it on March 18th. What it is leave provisions went into effect on April 1st, and it goes through the end of the year. And what it is paid and unpaid leave for coronavirus-related reasons. There are two types that are included in this. One is the emergency paid sick leave, and the other is the Emergency Expanded Family and Medical Leave Act. Both of these types of leave are reimbursement to employers as tax credits, and I'll go into that further in the next couple of screens. So the emergency paid sick leave, who is eligible? This is eligible to any employer that's under 500 employees. And any employee who works for that employer is eligible regardless if they're full-time or part-time. Full-time employees are then eligible for 80 hours of paid sick leave, and part-time employees are eligible based on the average number of hours that they've worked in the last 6 months. Or if they've been employed less than 6 months, it's an average number of hours per week that they would normally work in a scheduled week. Within the paid sick leave, there are different qualifications on what type of leave you're taking. And we've taken the approach, there's 6 different types. So the first 3 are to do with yourself, and the last 4 are to do with if it's someone else. So why we've done this and why it's written this way is because depending on if it's on the self bucket or the other bucket, it's calculated differently. So the first 3 for the self, so if an employee is subject to a federal, state, local quarantine order that is related to COVID-19, the employee has been advised by healthcare provider to self-quarantine due to being exposed maybe to COVID-19, or the employee is experiencing symptoms and is sick because of COVID-19. The last 3 are to do with if you're doing something for someone else, meaning if you're caring for an individual being quarantined, the employee is caring for a child, son or daughter, if their school or childcare is closed or unavailable. And the last is kind of number 6 is kind of a catch-all. I think they let that on there so they could add to it or clarify it if they needed to, but it's just saying if any other substantially similar condition happens. Just to kind of clarify, number 1 seems to be what we're getting a lot of questions on. Even our clients seem to think, after some of the webinars we've actually done, they still seem to think, since the governor has put a shelter in place or a stay-at-home order, that it would be subject to this number 1, but it really isn't, because it's not really considered. This was written for someone who's been sick or been exposed to someone who's been sick. So that's the biggest confusion that we've seen so far. All right, so how is it calculated? So on the first 30, when it's really for that one person, on 1, 2, and 3, it's compensated at the higher of the regular rate or federal minimum wage or their local minimum wage. But it's capped at $511 per day, or $5,110 in aggregate per person. The last 3 are, you don't have to pay them at the regular rate, you pay them at 2/3 rate. And that's capped at $200 per day, or $2,000 aggregate per person. So how they're calculated. As I mentioned, they're capped per day, or a lot of softwares that we've seen, including ours, has capped it like per week. So they're going to assume that they're working, or you're going to give them the full day's worth. Those tax credits are then applied to your the employer's Social Security taxes, but the employer is reimbursed for their costs. And I'll explain that in the next slide here. Actually, it's probably the next one, sorry. But some additional general rules is the sick leave does not carry over. It expires December 31st, so it cannot be used after that point in time. The employer may not require an employee as a condition of paid leave to find a replacement. So if they need to use it, they can't find somebody else to take their spot as in the job to cover those hours. An employee may first use this paid sick time under the law before any other paid leave. So if they have PTO time or sick time or vacation time, they are allowed to take this paid sick time before any of that can be taken. And then the employer may not require an employee to use other paid time, as I just mentioned, before using the sick leave. So the other part of this is the Expanded Emergency Family and Medical Leave Act, and some employers might be pretty familiar with the FMLA. The difference with this is they've lowered it. So most FMLA is only applicable to employers that have over 24, 25, or 50 employees, depending on your state rules. But this applies to everyone under 500 employees. But it's, again, on a temporary basis. It does expire at the end of the year. What this does is it gives the employee who worked for an employer 30 days prior to leave, if they have a qualifying reason to leave. And it provides 12 weeks of job productive leave after the 10 days, which is a lot of time, especially for small businesses. The one thing that's sometimes unclear that people don't understand is there's only one qualifying reason to take expanded FMLA, and that's if the employee is unable to work or telework due to the need for leave to care for a son or daughter because their school or place of care has been closed or unavailable due to the public health emergency. How does it work and how is it calculated? Like I mentioned, the first 10 days are unpaid. And during those first 10 days, the employee can substitute their PTO, their vacation, or even their emergency paid sick leave if it's applicable. And the employer cannot require an employee to substitute such leave during this time. After the 10 days and the remaining 10 weeks, they are compensated at 2/3 their regular rate. So similar to the emergency paid sick leave, numbers 4, 5, and 6. So that's why you can use the emergency paid sick leave for the first 10 days, because it's really covering the same thing. Part-time employees are based on the average hours of the 6 months or their normal work schedule, like paid sick leave. And in this case, it's capped at $200 per day and $10,000 in aggregate per employee. So how are the credits applied? So employers can get a fully taxable refunded credit equal to 100% of the leave that they've actually paid. And there's 3 ways you can get that credit back. You can wait until you file your quarterly 941 returns, but that's not really ideal if you're needing the cash right now. What we're seeing and what we're doing a lot of is reducing the employer's employment tax deposits and then getting their money back that way. So the example here is, for example, if the employer paid $5,000 in qualified sick leave wages and their EFTPS tax payment for their tax liability for their payroll this week was $8,000, they only have to remit the difference, the $3,000. You can also take an advance on these credits, and I can explain that a little bit also in this example. So for example, if the employer has $20,000 in wages that they've paid out of qualified wages, and they don't really have a whole lot of other payroll, and they're entitled to, and their tax deposit should be $8,000. Sorry, I'm lost myself here. It's an advance to the payment. So if your tax liability is less than the qualified wages that's been deducted, meaning you have a negative deposit due, you can fill out Form 7200 from the IRS to get that advanced payment. We personally have not done any, but they say that you should be able to get that money turned around in 5 to 14 days. Like I said, we've not done any up to this point. So we really don't know how quick that advance comes back from the IRS. This is an example I was trying to explain. So if you paid $10,000 in wages and the deposit was only $8,000, the difference is the 2, and then you would fill out the 7,200, getting the $2,000 back. Just some internal administration for the First Family Care Coronavirus Response Act, or the FFCRA. It's important for the person handling the HR duties or the payroll duties in your office to remember that there is required posters that you need to hang up. Should be near the other posters that are required by the Department of Labor. I did put a link here that goes directly to the PDF of the poster. You just print it out, stick it next to the other posters that you have in the location. And the other thing is to keep good records. So regardless of the type of leave that you have, the Department of Labor has instructed what you need to keep as the employer on file in case down the road somebody asks, for proof. Either for the sick leave or the expanded FMLA, you're going to need the date of leave, their name, the reason they're leaving, and a statement from the employee on the reason why they're not able to work. Also, in addition to that, if the employer requests leave for care of a child, which is what we see a lot of, there's actually more documentation that you should have in your file. So in addition to that, you need the name of your child or children, son or daughters, the name of the school or daycare, and a statement from the employee stating that there is no other suitable care available to them, that they cannot work. Lastly, when compiling payroll data, make sure that you're keeping track of the sick leave and the FMLA separately from the rest of your pays. It helps your payroll provider keep it straight, to distinguish the rates of pay and how to calculate the credits. Good record keeping is going to be key here. So that's really all I had on the FFCRA. I'm going to touch on the employee retention credits, which is also actually part of the CARES Act. So what is the employee retention credit? It's a fully refundable tax credit equal to 50% of the qualified wages for an eligible employer that pays their employees. Qualified wages are wages that are paid after March 12th and before January 1st of 2021. And then the maximum amount of qualified wages taken into account for each employee is $10,000, but you only get 50% of that, which is in this case 5. And then the credit is applied against the employer's portion of the Social Security wages. So who's an eligible employer? Eligible employers can be Any trade or business during the calendar year that you were open in 2020. This does include tax-exempt organizations. It's for organizations that have fully or partially suspended operations during the calendar year of 2020 due to COVID reasons or orders from the government. Or if you're experiencing a significant decline in gross receipts during the calendar quarter compared to last year. So for example, you could take this credit in Q2, April through June. Now, if you can prove that your gross receipts were at least 50% of what they were this time last year. The one difference with this program versus the paid sick leave and the expanded FMLA is it does include employers over 500. So this applies to any employer. The caveat is it is not eligible to any employer if you've already received your payroll protection loan or small business interruption loan. So how does the employer claim a refundable tax credit? So it's essentially the same as the Families First Coronavirus Response Act. They're reported exactly the same way. The three different ways: you can either wait till the quarter end and record the credit on your quarterly 941. You can lower your tax deposits as you're running payroll. Essentially the same type of example there. You pay the difference. So whatever credits you've added goes against the deposit that's owed. And then lastly is if the deposit owed is negative versus that you had more credits than you owed in tax. And that's again where you would actually fill out the form 7200. So can an employer receive both tax credits? So yes, you can get both tax credits from the Family First Coronavirus Response Act and the Employee Retention Credit. They just can't be the same wages. And since that's considered double dipping. But the qualified wages, like I said, must exclude the sick pay that's paid and the expanded FMLA. I'm going to touch on the delay of payment for employer taxes, which is also part of the CARES Act. There's not been a whole lot of guidance out on this, so I'm just going to share what we have so far. What this is it says that employers' share of the Social Security tax, the 6.2 that you have to match, you can defer that through the end of this year and not pay it until half 2021 and half 2022. It can also be applied for self-employment tax payers. They can just defer their self-employment tax estimates. You can pay 50% in 2021 and 50% in 2022. Employers can direct their PEOs to defer the applicable payments as well, so it does apply. But it's not available to anybody, again, like the ERC, that if you have a paycheck protection loan, that right now we don't think that you can still do this. But as I mentioned on there, to date, the Treasury has not released any additional guidelines on this. And I did check as recently as about noon today. There's just, the law says that the US Treasury will give guidance and administration on this, and they just have not. The last thing that they've given out information on is the employer retention credits. So we will wait and see. These are the two resources that I use a lot. I use it for this presentation, and we use it daily for questions from clients, guidance, things like that. So on the First Family Coronavirus Response Act, the Department of Labor has this link here and it's questions, and it's a series of almost 60 questions that it's great for an employer to go to if they have a quick, I'm not sure how to do this, or does this apply? Goes through all of them. I would be happy to point you in the direction of, I kind of know even the ranges of numbers on certain types of questions. So, and then the employee retention credits on the IRS website, they've actually released FAQs also similar to the DOL on how it's used, and have written it in pretty good layman's terms that most people will understand. It's really all I had for today, so we can open it up to questions.
Okay, Mindy, thanks so much. Very, very informative. And here's what I'm thinking about doing. I'm going to kick it off. I'm going to ask a question for a friend. So you can guess where that's coming from. And this is a general point of clarification. So within our audience, I think we have a mix of business owners, many who use a payroll provider, a third-party payroll provider, some who actually process payroll themselves. So I'm asking this question in the context of our clients who probably use a third-party provider. In general, for that scenario, as we would use a firm like yours, that process is set up. We've probably gone through 2 payrolls already since this emergency occurred. I'm curious as to, from your perspective as the person or the firm who actually is that third-party provider, what kinds of directives are you seeing coming from your clients relative to this? Is there little activity because of lack of understanding yet? Are they moving forward and being very direct with you? I want you to do A, B, or C within 1 or 2 of these programs. Are you reaching out and giving guidance regarding what they should do? And the other piece of my question is, it seems to me that qualification has more to do with the employee's specific situation, but the credit, as I see that credit coming, especially for FFCRA, is to the employer in the context of their payroll tax. Number 1, tell me if I'm reading it correctly, and just give us a general overview of what you're seeing happening around these 2 acts.
You are correct on the fact that the credit is to the employer. This week has been the first week that we've seen some traction on it, obviously, because it didn't go into effect until April 1st, which was last Wednesday. So this is the week we're starting to process payrolls for period ending last week. We have paid some out. We do have one client that has had an employee that has COVID-19, and due to that, his business is closed right now because they're all under self-quarantine because they were exposed. So that's, in essence, they're able to get their full pay up to 80 hours of the sick leave in that case. We have seen also, and I truly believe this is what we're going to see the most of, is people that they're home and can't telework, or because their kids are home because school's out. And I know Missouri, as of yesterday, canceled school for the rest of the year. In Illinois, that hasn't been the case yet. I'm keeping my fingers crossed that it's not, but reality is what it is. But I foresee that being used probably mostly for the sick leave and the expanded FMLA, because I think that's what's going to be. There's going to be more people go home with their kids versus really sick. Does that answer your questions?
Yeah, that's great. That's great. So,
wait a minute, Mindy, I got a question for you as well.
Go ahead, Steve.
So particularly as it relates to the employee retention credits, right? So we've got businesses that are actually doing really well through this health emergency. There are some businesses that are doing exceptionally well, and obviously some businesses that are severely affected. Do you have any recommendations on, you know, if you're not able to use the employee retention credit, but for the economic injury disaster loan, you have to certify that you are economically injured as an entity in order to apply for that loan, right? Is there some guidance that you guys would offer that would say there are these circumstances where you probably ought to use the employee retention credit and not use, you know, a PPP or an EIDL?
Well, I guess one thing would be if the employer has over 500 employees, they wouldn't be eligible for the payroll protection program.
Right.
They would have to prove that their business is lacking as far as gross receipts 50% over the same period of time last year. As far as referring it back to the other type of loan, I don't know that I feel comfortable giving guidance on that part. But I would say in the case that the employee retention credit versus the payroll protection program is the biggest thing I've seen is because it's eligible for employers that are over 500 employees.
And I could see, based on what you're saying, Mindy, that especially for an employer with more than 500, that could be a substantial amount in terms of their, if you want to call it, payroll tax liability. And that is in fact forgivable. It is truly a credit. It is not something that would have to be paid back at any point in the future.
Correct.
Okay.
And it's essentially $5,000, up to $5,000 per employee.
Okay. In what time period? 5,000 for the duration of the program, or
For the duration of the year.
For the duration of 2020?
Correct.
Okay. 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 So let me pose a question to you from our participants. David asks, so if I'm a biweekly depositor, payroll depositor, I can simply deduct this from my payment, then record it on my Form 941 when I file it. Do you have guidance on how to record this on the Form 941?
I wish I did. He is correct in thinking that's exactly how it's done. The IRS has not released the next form for the 941. I foresee there being a lot of extra lines to reconcile all of this because the 7200 form actually has to be reconciled to that as well. So it'll be interesting to see what this form is going to look like in July when we're doing it for the second quarter.
Okay, good. The next question from Michelle. Can you utilize the employer payroll tax deferral until the PPP loan is processed and paid? 4/15 payroll is run. If PPP doesn't pay the employer until 4/20, then no longer utilize the payroll tax deferral. Basically, can we use it in the deferral until we see cash flow from PPP? Does that make sense to you, Mindy?
It does make sense.
Yeah.
I'm not sure I have a clear answer for that. I mean, Steve, what would you think that could be? I mean, as it's written, it says they've gotten the payroll protection loan, they can't participate in it, but
yeah, I would say the same thing, and they may not even have applied yet, right?
Yeah.
So yeah, it's a gray area, and again, we're getting FAQ documents and guidance that comes out almost every day. So I would say, it's best to err on the side of caution. The issue with the PPP loan is you have to self-certify. So different than any other type of lending product, typically the lenders are verifying and going through a process of verifying your application and underwriting that application before they provide a loan. This is unique. This is where the borrower or the applicant is self-certifying, and there are criminal statutes that come into play if you are intentionally fraudulent in your application. So I would say it's to your best interest to err on the side of caution, but it's one of those gray areas where I think you could make a strong argument that said you're applying for these tax credits because your business is continuing to operate, right? And you're not potentially going to access some of these other programs. However, if the market continues to deteriorate and you do find yourself in a position where you have to access those programs, you could probably make a rational argument that the market conditions changed. So I don't know.
Here's an interesting question, Mindy. It's complex. It's more complex than it is straightforward. My small company is fortunate that we were able to all go to a remote working situation, except for one person. He does not have good internet access. And he also says that he has to care for a sick spouse who may or may not have COVID-19. He's filing for unemployment. Should we do something different? So Mindy, while you're thinking, the first question I would ask is, can an employee file for unemployment if the employer has not expressly told that person they're furloughed or laid off?
I would say they could try, because the process of gaining unemployment is the same. But I don't think there has to be anything in writing to say that they've been laid off. I think if it's a verbal explanation, that they can do that.
I think what's important there is clarity between the employer and the employee. Are they working from home because they can't go into the office and its payroll still being paid?
Correct. I guess too, the paid sick leave and expanded FMLA, if they can prove that they don't have anybody else to care for their child, and then they could get 2/3 of their pay or unemployment.
And it seems that the law requires the employer to cover them for that instance, right? That's the difference of this law. It requires the employers to provide that coverage for the employee.
Correct.
Yeah, it appears here, and I had received this question before, that if the employer is continuing to pay payroll, to process and pay payroll, that should be the overarching determinant of whether or not an employee could or could not file for unemployment.
Oh, that's absolutely true.
Okay.
So, I mean, if the employee goes to try to claim unemployment, the employer then is going to come back and say, this person has a job, I'm paying them.
Yeah.
They can't claim unemployment.
Yeah. Okay. Good. Okay. I have some other questions that are more related to the EIDL and PPP programs. Mansuk asks, what do we know about the timelines for response on both EIDL and PPP? I've applied and not heard anything back at all. Anything that I can do to speed things up?
So what we talked about earlier is the SBA issued guidance, I think it was Tuesday night, to all lenders on the PPP program, saying that they must disperse funds within 5 days of receiving the number from the E-Trad system. And lenders, I think, are, from the conversations we've had, are working diligently to meet those requirements. That's on the PPP side. On the EIDL side, SBA also came out and said that their objective was to be able to disperse any applicable advance within 10 days. We don't know that, we don't have firsthand experience from any of our clients that have seen that yet, and I think the SBA is certainly been overwhelmed from all this. The guidance that we're saying to folks is, look, you know, we're in unprecedented times, obviously, and I, in my lifetime, have never seen the federal government act as quickly as they have. And it has put an enormous burden on the federal agencies, the state agencies, and the various lenders that are participating. One thing I will say is the SBA has moved with remarkable speed, and give them a little bit of grace. They understand exactly what's going on. And I think if you compare the SBA's response to what the states have done with the unemployment rule changes, there's no comparison. The SBA has done a remarkable job of trying to move heaven and earth and get it out there. So I take them at face value that the SBA will be achieving those guidelines if they're not already. And I would just say, give them a little grace. It's coming.
Oh,
Sorry.
Standing. We're working from home, right? So, hey, see, we had another question kind of along that line, you know, with respect to the $10,000 advance under EIDL. Can you share what eligibility requirements criteria they are using to determine how much you can receive? As far as I know, there is no clear guidelines. From what we've been told is you will be called by an SBA processor, and you should be prepared to tell that processor how this has affected your business, you know, affected it, you know, just from how is it affecting it and how monetarily is it affecting it? So, Mindi, we had another question. You got anything to add to that, Steve?
No, I think that's exactly right. And that's why we created those spreadsheets to share with the group. So
Yeah.
we've got some tools to help you in that regard.
Yeah. Mindi, for you, what if someone was on unemployment previous to COVID-19 closure at an amount less than the $600 that unemployment would be now? I think she might be confusing that with the pandemic assistance. Will the new unemployment amount for this employee going forward be the reduced amount they received previously or the new $600 a week?
I am not an unemployment expert. Really don't have an answer to that. My opinion would be I wouldn't think so because they weren't unemployed due to the COVID pandemic. But I don't know, to be honest.
Yeah, if they're unemployed, yeah, I mean, I think they're being pretty liberal with the pandemic assistance, and that's the $600 a week. I don't know, Michelle, if you're still listening, maybe clarify that question.
So the unemployment expansion was part of the CARES Act, which was enacted as of whatever date it was, March 27th. So
March 27th, right?
Yeah.
So if Michelle's question is if she's on regular unemployment, will they automatically add the $600 a week pandemic assistance unemployment? Is that what her question is?
That's how I understood it.
Yeah, that's what I'm assuming. So I would tell our participants that what's been interesting this past week, oh, wait a minute here, more looking to understand how my cost will change if someone had been receiving $240 a week in unemployment, and now will they receive $600 a week, and now my rates go up accordingly? Well, I know who this is, and they're in Illinois. So what hasn't been determined, and Mindi, maybe you know, is the unemployment insurance given out? If unemployment insurance is given out because of COVID-19, is it going to affect your unemployment insurance rate? In Missouri, they've waived that. Correct, Steve?
Yeah, so I think the federal guidance came out and said that the pandemic assistance is going to apply on top of it if you're unemployed. And secondly, it is not going to affect the ratings of employers, nor will employers have to share the burden in that $600. So if you've already laid somebody off and you're paying part of whatever aid they're available to under the state laws, that continues. But your experience is not going to be impacted when you're re-rated from an unemployment insurance perspective due to layoff, due to the health emergency, and you are not going to have to pay some employer portion of that $600 is the way we read the law.
Correct. So it's interesting. What I would tell our participants is, we've been having these webinars and talking about these programs and how they work. And this past week, especially, is where the rubbers kind of hit the road. And there's a lot of questions coming up that is a little bit hard to answer. So good reason to keep listening to the webinars.
Yeah, Missouri did come out this week and say that they're going to try and make effective next week, beginning the week of the 13th, the pandemic assistance. So they were awaiting on some additional guidance from the Department of Labor. They said on Tuesday that they had received what they needed. Now they just got to change their system to allow for special applications. So
and that will be retroactive to April 1st, correct?
They came out and said that payments would be, for those that are eligible, they would receive retroactive pay back to the 1st of April. I went to the Illinois site this morning. I didn't see any additional, updates on the Illinois site as of, first thing this morning. So I don't know what they're doing in Illinois yet.
There's a lot of that goes on in Illinois.
Okay, let me pose another question, Steve. This may be for you. It's from Lynette, and she asks, once we receive the PPP money, this is Paycheck Protection Plan, and we hire back employees, is there any guidance on how we pay tipped employees?
So tips are included in the calculation process. If you're a restaurant that's closed, I don't know exactly how you're going to do that, to be honest with you. I don't know the answer.
You have to pay them at least minimum wage.
In place of tips, so you got to pay them a rate that's commensurate with minimum wage, Mindy? Is that how it works?
That would be the case, yes.
I thought in reading the act, it seems to stick out in my mind that they are allowed to put a reasonable tip rate in there, even if it's not documented.
As long as it's at least minimum wage, is that what you're saying, Mindy?
I would say at least it's minimum. It has to meet minimum wage requirements, I would think.
Makes sense.
And then I guess, Terry, like you're saying, beyond that, if the restaurant knows that an average tipped waitress or waiter is making so much dollars in tips, if they can, pay them extra, pay them that as if they were working, which is the purpose of the payroll protection program, that would be sufficient.
Yeah.
Mindy, I'm curious along that line. Are you seeing with the use of debit cards and payment cards now, are you seeing a much higher proportion of reported tip wages than you would have in the past as an employee, as a paycheck processor?
Yeah, the credit cards and the debit cards have definitely helped that. I think our clients, do a good job making sure that they're reporting the tips to meet minimum wage.
Here's another one we had. Can a small business qualify for a prorated or reduced loan forgiveness if they use less than 75% of the PPP loan for payroll costs before June 30th? In other words, they kept some of their employees, but not all of their employees on payroll between now and June 30th. Steve, I think we was talking about that, or where this person may be getting confused is you have to apply and receive the money by June 30th. It's not necessarily, it doesn't have to be spent by then. And as of right now, we know of no time limit on how long it takes you to spend that money. So, you got 8 weeks before you can start. From what we understand, you got 8 weeks to apply for forgiveness, but the money doesn't have to be necessarily used up in that 8 weeks.
Yeah, you cannot apply for the forgiveness before 8 weeks after you receive the funds.
Right.
So yeah, it sounds like the questioner is putting an artificial deadline on themselves, so they don't necessarily have to use it in that period of time. I mean, there's going to be some practical realities. It might take time to get people back to work if you have them on furlough and actually get them on payroll too.
So Steve, here is another question, and person is asking for guidance on record keeping requirements for the PPP loan. So have we seen that request document, that forgiveness request document yet? Do we know what we need to document as we go in to do that?
There's some guidance on that, but again, that's to the bank. So when you think about the banks are going to be completely overwhelmed with this is a completely new process. So the application for PPP is relatively cut and dried. The federal application, as people have seen, we've distributed that. It's 2 pages, relatively easy to fill out. Banks are adding and supplementing that application with various pieces of information that leads them to feel comfortable and compliant with their internal requirements. From a forgiveness standpoint, it is up to the applicant to apply for forgiveness, and they have to justify how they spent the money. So they're going to have the records that substantiate what they say was the use of the funds, and then the bank is the one that has discretion to forgive that loan. And then of course the bank will have to report to the SBA what they've done. But it's up to the lender actually to determine exactly what they'll receive as proof and whether or not they will forgive that loan as it's currently written.
Thanks, Steve. Chris asks, what is the status of the PPP application for self-employed owners and independent contractors? I've heard the application would be available at banks today, and he's right, April 10th.
Yep.
Also, is there an update on the Pandemic Unemployment Assistance, PUA? in Missouri for self-employed owners and independent contractors that do not receive a W-2.
Yes, so he's absolutely right. So today they opened up applications for sole proprietors, independent contractors for PPP loans. And then, as we stated earlier, Missouri stated that beginning on Monday, you ought to be able to go on to the Missouri unemployment website, and we provided that link before, and we can do so again as part of this slide deck replay. And they are expecting to have the applications available for pandemic unemployment assistance on the Missouri site this coming week.
Okay, good. Thanks, Steve. Okay, it looks like we've gone through all the questions online. Oh, I do have one other. David asks, and this is jargon, his lender told him that he was assigned a GP number. Is that the same as what you mentioned? And I think this came out about the time that you were referring to the SBA having assigned a loan number, having to have the funds or the approval within 5 days once the SBA assigned a number. Is that called a GP number? Is that?
I don't know the answer to that question.
Okay. And it depends. You might ask your, David, you might ask your lender, you know, if the GP number is the bank assigned number or is that the SBA assigned number. That might give you some clarity.
If that is the case, then the bank's got 5 days to get the money to you.
Yeah.
Okay. And we have a new question from Christy. My payroll provider stated that they heard that the funds have to be used within 8 weeks of being funded. Okay, so Christy, I'm not sure if you're referring to PPP or another program here. You might type in another note as to which. Oh, and she says, sorry, you may have already covered this. So she says, my payroll provider stated that they had heard the funds have to be used within 8 weeks of being funded.
Mindi, has there been any guidance that's gone out to payroll providers along that line?
Not that I've heard.
Yeah.
Okay, and Christy clarified she was referring to the PPP loan. So, Steve, that might be one for you.
Yeah, we know the law says you cannot apply for forgiveness before 8 weeks after you've received the funds. And I think there is a lot of confusion about what is that 8 week period of time. But I don't believe there's anything that says you have to use the funds within 8 weeks of receiving them.
Okay, good. And David, you sent me a note back regarding, you had asked a question really early in the webinar about the GP number. That's what you wrote. And that's what we were referring to in that answer is determine whether or not that number is a number applied or you know, issued by your bank for your loan number or by SBA. But what Steve was referring to was the time frame had to do when SBA assigns a loan number. Clear as mud.
Yeah, Michelle's got a question there. Doesn't matter if one of the employees were on payroll for the PPP calculation when the loan went in, but that particular employee no longer works for my business at this time. And that particular employee therefore won't be paid payroll. Does this alter my forgiveness? I mean, as far as we know, you know, you're supposed to keep your employees enrolled. That's the intent of the deal, but it, you know, if there's a little variation in the FTE, the forgiveness shouldn't be based on that. It's on whether the money was spent for payroll. So, you know, if you're the owner, you can pay yourself more up to the $100,000. You know, so you can max that out for yourself. And then beyond that, if you don't have, you know, the money to spend on the payroll, it wouldn't be forgiven. So you can either give it back or else it's going to turn into a 2-year note with a 1% interest rate, and the first payment will be deferred 6 months.
Correct. So there is no prepayment penalty. So if you don't use all the funds because you can't rehire all of your employees, you can, you know, turn the money back in, and there's no prepayment penalty against that.
Okay, I do have some clarification.
Awesome.
Ask my expert. So the 8 weeks starts when the day the loan is funded, so the day you get your money. And then you have 8 weeks to spend that So it is correct. The payroll processor was correct. They do not have to spend it all, but they're only forgiven about what is spent in those 8 weeks. So that's the only part within the 8 weeks. That's what's going to be forgiven. You don't have to spend it all. You just pay the 1% on what's left because that's the interest rate on those loans.
Okay, and there's some specific guidance about that?
I can find out.
Awesome, that'd be great. Yeah, we'd love to be able to post that so people have that.
Sure.
Okay, Michelle, thanks for that. Okay, and regarding Michelle's question, I think we answered that live already. And one thing I can add to that, this was the question regarding whether or not a specific employee were on payroll or not. My personal experience around the PPP loan is my bank did accept a payroll full year summary. They did not require me to give a name person by person. I just simply had to certify that none of the individuals included in that payroll made more than $100,000, and to the degree that any individual did, I had to deduct that. But they did not ask for specific names in the supporting documentation. It was a summary payroll report,
And
which would imply to me that go ahead, Mindy.
No, that's okay. We've prepared a lot of these in the last 2 weeks. And it just depended on the lender.
Yeah.
Some took exactly what you did. Some asked for more information. It just bank by bank differences.
Great. Okay. Okay.
Yeah. And if
Looks like we've answered all the questions.
Writing about the 8 weeks thing, we'll blast that out. But that,
Sure.
you know,
No problem.
Okay, so we're up to a full hour, and we've answered all the questions live. So know that even though we answered the questions live, we will still send you out post-webinar a recording of the webinar, both PowerPoint decks, the one that was used by Steve and the one that was used by Mindy, and we will send a transcript of the Q&A as follow-up. So again, thank you everyone for participating. Thank you, Mindy, for joining us today. As Steve said earlier, you're phenomenally knowledgeable, and this has been a great opportunity. So what I'm going to do is give each of the three of you, Mindy, Steve, and Terry, an opportunity to make the last comments, and then we'll sign off. So Steve, I'll let you go first. Any comments?
Well, first off, I'd like to say, Mindy, we are very grateful to have you on the podcast. Thank you very much for your time today. Appreciate your company and all that they're doing and your leadership in this area, and for taking the time out to help us inform our audience about the specifics of these programs. It was incredibly valuable. I got a whole page of notes here myself, so you did an awesome job. We highly recommend these folks. We use them personally. They're outstanding folks, and can't endorse them highly enough. And I want to thank Mindy again, and Marquita, thank you for moderating these forums. And with that, I'll turn it over to Terry, and then we'll give Mindy the last word.
Yeah, Mindy, I thank you myself, and just for the people listening, I have for years and years always recommended that you use a payroll service. And you know, there's always so many changes, and that kind of puts the liability on them a little bit because they're in charge of keeping your taxes straight. But it's also, when you get in times like this, you know, we applied for the PPP through Mindy's company, Payroll Central, and it was literally like pushing easy button. I got emailed exactly what I need to put it right into the form, and it was easy peasy. So thanks for making my life easy. But there's a lot of changes going on, and as we said, these rules are now, you know, where the rubber hits the road. So I would stay in tune to the webinars, and you know, just keep up to date, and you know, go to our website if you're interested in consulting with us. We've saved a lot of people money compared to the per hour rate that we charge. And the one common theme that we're not seeing business owners do is use all these programs together. It's not just about the PPP program. It's not just about the EIDL. You know, there's several ways to get them all to work together to get you the maximum benefit that you're allowed. So stay in touch.
Great, thanks. And Mindy, you get the last word.
Well, thank you. I do thank Steve and Terry each to let me have this opportunity to talk about what we're good at, I guess. It's been an interesting last 4 weeks. We've all learned a lot more than we ever thought we'd learn this year, that's for sure. But we're available. We can help out whomever. But due to great software, we've been fortunate to be able to help our clients get them the information that they've needed in the last couple of weeks.
Okay, great. Thanks so much. And thanks to all panelists. And with that, I'm going to end the meeting, and we'll see you all again next Friday at 3 o'clock.